Great. Thank you very much, Mr. Paul. Would you please remain on the stage for a while? With the keynote from Mr. Paul, we'll give you an insightful and also with thoughtful about what is really the blockchain technology. But that is about the introductory of the key to the message, which is we're going to get into about the dig more detail of that. So, honorable guests, we have learned about this role of the blockchain. But to go further, we would like to invite for our guest, CEO of the Ripple, Mr. Brad Garlinghouse, with us here. So please welcome Mr. Brad.
Brad, good to have you with us today.
Great to be here. It's an honor to be here.
What kind of world are we living in where the startup guy dresses like a banker and the banker dresses up like a startup guy?
Look, Ripple is a company that takes our customers seriously, and I think, as you already pointed out, there's a lot of stuff going on in blockchain. Ripple has tried very hard to focus on solving real problems for real customers, and we wear the suit.
Well, then let's go into that then. Can you tell us, what is Ripple? What is Ripple's vision for the Internet of Value? And frankly, what does the Internet of Value mean?
Sure. So when I think about the presentation we just saw on what is blockchain, at the end of the day, I think about blockchain as something that can enable two parties to transact without a central counterparty. I've gotten the question before of, is Ripple a blockchain company? Is Ripple a crypto company? What is Ripple? And I've said, no, Ripple's a payments company. We're solving a payments problem. We happen to use blockchain technologies. We happen to use a digital asset to solve that problem. But at its core, Ripple is selling solutions to banks, to financial institutions, to payment providers globally that enables them to transact with much lower cost, much faster, and to improve, I'll just generically for now, we go deeper later, but around how liquidity is managed, how cross-border transactions are managed. And you're talking about trillions of dollars that is parked in these accounts around the world to help enable payments. And Ripple is making that far more efficient by using blockchain technologies, by using a digital asset. The kind of one that we use is XRP, as you introduced, and I can talk more about how that works too.
And before we delve deeper into Ripple and blockchain and payments, I want to take a step back and get to know a little bit more about your background, because it's quite interesting. I mean, here you are, you're one of the most prominent figures in the blockchain space today, and yet you come from neither a engineering / computer science / cryptography background, nor do you come from financial services, and you just went off on payments. So, what path led you to Ripple?
Well, I'll tell you a quick, slight tangent on this. When I got the call, when they were looking for a new leader at Ripple, I got a call, and I was actually at the time an Uber driver. That is a true story. I had taken a month of time to do new things and try new things, and I decided to be an Uber driver. So I knew more about Uber driving than I did the payments industry. I say that somewhat in jest, but what's interesting about what Ripple is doing is I think if you have too much of an insider's view and you come from banking, then you might not fully appreciate what is possible, and as you already introduced, all the different things you could do with blockchain. If you come too much from the product and tech side, there are a lot of people in the blockchain community that I think they think about the tech and the product first and not the problem they're trying to solve. I think what Ripple has been effective at doing is bringing together 3 legs to a stool. We have 4 legs here. I'm trying to think what my 4th could be, but 3 legs to the stool. One is, it is understanding banking and understanding payments. The second is you've got to have really robust technology. You have to have an excellent product that's solving a real problem. But the third is we live in a regulated world. And these 3 legs of the stool, we have people at Ripple who come from regulatory backgrounds, who come from deep in the tech space background, and certainly deep in the banking background. And I get to be the ringmaster of this experience. And I think my experience in Silicon Valley, I moved there 20 years ago at the birth of the internet. When I moved to Silicon Valley, Netscape was a couple years old. Google didn't exist. Amazon was just a bookseller. When I look at that experience 20 years ago and how I apply it to blockchain today, I think there's a lot of similarities. There's a movement happening in terms of how blockchain can change industries. 20 years ago, we talked about the internet. We talked about how the internet is going to change industries. What I think is exciting is it's very difficult to predict how blockchain technologies are going to change industries over 20 years. In the same manner, 20 years ago, I couldn't have predicted the internet would enable me to click a button on my phone and get on-demand cars or food or dog walking or anything else you might want.
And you've worked with some of the storied names of Silicon Valley. Have those experiences been sort of building blocks that have successfully led you towards Ripple, or has it been a bit of a meandering path where you just sort of found yourself all of a sudden running, one of the most prominent crypto blockchain payments companies in the world?
Well, look, I think in some ways luck beats skill, and so I think Ripple has made a lot of smart decisions. We've also been fortunate to find ourselves in the right place at the right time. There is, I think, appropriately a lot of excitement around blockchain. There should be. But I think the hype in many cases is ahead of the reality. Within that excitement, Ripple's focus on solving a real problem for real customers and being really the only blockchain company with real production customers has put us in a really powerful position. What has served me well over the last 20 years in Silicon Valley looking at these opportunities is thinking about, at the end of the day, you've got to solve a real problem. As we talk about ICOs, and I know it's one of the topics we'll cover today, if you're not solving a real problem, if there's not real utility, you have to ask yourself, well, why? What is the point here? And I think that when I think about the long-term value of XRP, when I think of the long-term value of any digital asset, it's about the utility, the problem it's solving, and the size of that problem. If there's real utility, then over an arc of time, the value of that token is going to reflect the value in solving that problem and delivering on that utility.
So, given your background and given the importance of blockchain today, is it a fair assessment to say that it is responsibility of everyone in the organization, regardless of rank or background or training, to understand blockchain, the implications of blockchain, or is it too complex or too nuanced and best left for the CTOs and corporate strategists?
Well, I'd answer that question the same way I'd answer the question in the context of the internet. How many people really understand things like SMTP? SMTP is the guts of how email works. The number of people who use email that understand SMTP, that's a limited set. I don't think you need to understand the cryptography behind blockchain, the intricacies of how ledgers are distributed and how nodes validate transactions. What you need to be able to understand is it solving a problem? And again, to me, sometimes we get too caught up in the technology, we get too caught up in almost religious arguments about decentralization or not decentralization, and it comes down to, can we solve a real problem? I even think, as you think about some of your presentation earlier, one important question I think we should all ask ourselves when we're seeing a blockchain company is, would a database work better? I think a lot of times we say, oh, that's cool, it's hot, it's blockchain, buzzword, blockchain. But guess what? There's a lot of times I see blockchain startups that come to meet with me at Ripple, or I read about them in the media, and I think, a database would work a lot better than a blockchain in that situation. And that's an example to me of the hype getting ahead of the reality. People shouldn't use a blockchain just because it's a cool buzzword. It's like big data or AI. We should ask ourselves, is this uniquely solving a problem for this problem? And I think there's plenty of examples where that's not always the case.
And do you think that's really just a symptom of people getting seduced by all the hype and activity and valuation?
I think it's people getting seduced by easy money. Easy capital, right? Lots of entrepreneurs. And by the way, in my 20 years in Silicon Valley, I've been involved in lots of startups and raised capital and been at companies that was hard to raise capital, and it's been easy to raise capital. ICOs have made capital raising, it has reduced the friction and has exposed that opportunity to sometimes unqualified participants. And so I think the seduction is in if you make it far less friction and far less oversight in how you raise capital, people are going to say, hey, I got a token. Whether or not that token does anything to actually solve a problem became secondary, and it's certainly one of the reasons why I have been proactive in speaking out. I think people's excitement about ICOs is way out of step with the reality. Well, I'll leave it at that.
Well, let's pause the ICO discussion because I'd love to hear more about it. But you're here in your capacity as Ripple, and it's probably best for us to understand a little bit more about how your technology works. So can you start by explaining to the audience, particularly those of us that aren't bankers, how international remittances work today and how Ripple intends to upend that process, and what's the role of the XRP token in all of that?
Great. So today, if Paul and I decided we wanted to send $10,000 to San Francisco, where I live, it would be a whole lot faster for us to go buy a plane ticket at the Bangkok airport and fly it there than to actually use what's called the correspondent banking system to get it there. So correspondent banking is the nature of how it was developed in really the 70s. There's something called Swift messaging that confirms transactions. And it's basically just a set of instructions from one bank to another bank to another bank to another bank that allows money to move. It is slow, it is expensive, and there's very little transparency in how that works. So two amazing stats on that transparency point. One is that even Swift would tell you there's a 6% error rate in those global transactions. Think about that. For those of us that are in the tech world, we aspire to have 3 nines or 4 nines or even 5 nines of reliability. Our global financial infrastructure has 1 9 of reliability. That's pretty embarrassing when you think about the fact that I can stream video from the space station, and it takes me, flying money there is the most efficient way to move money from point A to point B across networks. So I look at that existing banking system and the intermediary, that central counterparty, and we talk about blockchain as something that can allow two parties to transact without a central counterparty. The central counterparty is that correspondent bank. We can democratize banking by allowing a financial institution and another financial institution to transact directly without having that chain of that and that trust that goes through the chain today. So we today work with banks, including SCB, to enable fiat-to-fiat transactions, do real-time fiat-to-fiat transactions using existing what are called pre-funded accounts, Nostra and Vostra relationships. We just started rolling out another product that allows you to use XRP as part of those payment flows. We've announced 5 or 6 customers using XRP for those payment flows into Mexico, particularly Mexican peso. We certainly think this is just the beginning. If you can offer a cheaper product, a better product at a cheaper price, I think you're going to see a lot of people adopting that as a solution.
So at the end of the day, without, as you said, not needing to know the technology, the problem you're trying to solve is just cheaper, faster, more secure payments.
Right. I mean, I don't know the details of SCB specifically, but a bank like SCB will often have 100 or more correspondent banking relationships where they have parked capital around the world. They will hold capital in dollars, Mexican peso, Philippine peso, Singapore dollar, and then to transact for that cross-border transactions. And by the way, 70% of the Thailand's GDP touches cross-border transactions. To enable those transactions, you then use those pre-funded accounts to debit and credit, and that is basically how correspondent banking works today. Our view is simply when SCB, as an example, parks capital in, let's say, the Mexican peso, that's dormant capital. It's sitting there. How can we make it more active? And if we can enable a real-time payment instead of a pre-funded payment, we can actually accelerate the global engine of commerce. That's good for banks. That's good for banks' customers. We think it fundamentally, the architecture that we depend upon today that was built 70 plus years, in the 70s, needs a full upgrade to really an age of the internet.
So by its very nature, an international payments company has to be international in terms of its strategy. What is Ripple's global strategy, particularly as it pertains to Asia? Because you have a joint venture in Japan, you're collaborating with us here in Thailand. I know you have offices in Singapore and in India, and you've probably even done a few things over lunch that I don't know about. So what is your grand plan to sort of dominate the world?
Well, step one of dominating the world is make sure that we're keeping our customers very happy. We've been really fortunate. We're signing up more than a customer a week now. We haven't even really talked about, we focus mostly on banks. One of the other dynamics here is you have a whole next generation of digital wallet providers. These are the PayTMs, the Linlin Pays, the Alipay, even the PayPals. And when we think about it, it's how do we make all of these interoperable through a next generation set of technologies? So when I think about our international strategy, we've been incredibly fortunate. We now have over 60 banks we work with in Japan through a joint venture in Japan. We have banks throughout Southeast Asia, including SCB, we're fortunate to be working with. Last week, or maybe the week before, we signed up some of our first banks in Brazil with Itaú and Bex Bank. A few weeks before that, we signed up Linlin Pay in China as one of the digital wallet players. So look, by nature of what we do, we are a very global company. We certainly have customers around the world and employees around the world also.
Great. Now, until recently, Ripple has been a name that's largely known in fintech circles and blockchain circles and banking circles, but probably very little public awareness. And then in December, we just see this tremendous run-up in all cryptocurrency prices. And now all of a sudden, everyone and their grandmother is talking about Ripple's XRP and how they can get some. What do people not know? What should people know about XRP? What are the great misunderstandings about the token and what its place is in the blockchain world?
Well, I guess two things I would say are misunderstandings. First of all, I would say for everyone's benefit, there is a lot of misinformation out in the marketplace, not just about XRP, but about digital assets broadly. If you're interested in participating in the digital asset space, do your homework. There's a lot of misinformation. I would say there's a lot of religion almost about this space. And we have people who believe in God and people who don't believe in God. For XRP, I'd say that the two biggest misconceptions, one is people describe it as a centralized technology. That's just not true. XRP is a decentralized technology. Anyone in this audience can go and download the open source technologies that allow you to run a validator. The other important measure, I think, is if Ripple, the company, went away, the XRP ledger would continue to exist. So the first misconception is XRP is absolutely decentralized. Actually, even in contrast, I mean, there's some evidence that it's in some ways more decentralized than some of the ones that are called decentralized. The second misconception is that, Ripple, the software company, Ripple, the company selling solutions to banks and payment providers, Ripple could be successful, that XRP would not be successful. Look, at our core, our goal is to develop an incredibly healthy XRP ecosystem. We own about 60% of all XRP. I am the most interested person as CEO of Ripple in making sure the XRP ecosystem is successful, making sure that not just Ripple is successful building tools to leverage the liquidity and leverage the velocity of XRP, but also looking at other use cases to leverage the XRP ledger. We've started to do some of those, even some of the things you talked about earlier around provenance or on identity. There's lots of examples where the XRP ledger could be leveraged very effectively for that. And so we will continue as a company to invest in, support, and partner with companies going after those other vertical use cases.
So if you had a man on the street approach you and who's obsessed about, I just bought a whole stack of XRP and, I want to see it, climb X thousand of percent, and, what would you say to that person about Ripple in general? It's like, I know you probably want them to get off the price of XRP. What would you say? How would you redirect their focus?
It's not even so much I would get them off the price. It's that, look, if you are engaging in any digital asset speculation, if you're doing it because you're trying to get in and out, like I'm not interested in that. One of the things I say internally at the company is I don't check the price of XRP every day. I don't check it every few days. For employees at Ripple or even people in the ecosystem, I don't think about the price over 3 days or 3 weeks or 3 months. What Ripple is doing in enabling an internet of value, this is a 3+ year journey. What I know for certain is if we can continue to build the momentum of customer usage, it continues to drive the velocity and demand for XRP. Over a 3+ year time frame, I feel very comfortable about the opportunity to continue to grow the value of the XRP ecosystem, which is good for all participants in the XRP ecosystem. Ripple, has not, unlike some of the other players in the crypto space, we have focused on an institutional use case. And some of the run-up you were describing that happened last December, I think, was in part driven because XRP was kind of unknown. We weren't focused on speculators. We weren't even listed on the most exchanges. For many markets, it's actually hard to buy XRP. And people say, Brad, why aren't you solving that? And I say, I'm not trying to solve a speculator's problem. I'm trying to solve an institutional problem. I'm trying to solve a problem that is measured in the trillions of dollars that is focused on payment providers and banks. And while the gentleman on the street I might bump into, if he or she is interested in the long-term value creation, then I view them as part of the journey, and I want to give a big hug. Or at least take a selfie with them.
Okay, then I'll ask you about the price, and we'll get our selfie. So let me get back to a little bit more on sort of the public awareness and perception of Ripple, and I think you addressed some of that, but there are a lot of these Bitcoin and blockchain purists. One of the comments that I get when I talk to a lot of these folks are that, oh, well, Ripple's not, they're not real blockchain because they're not public.
Yeah.
Part of it's decentralized, but it's not enough to be decentralized. But you need to be a public blockchain. And
yeah.
And oh well, XRP will never displace Bitcoin as a cryptocurrency.
Yeah.
What are your thoughts on that?
Yeah.
Is there any merit to that at all, or?
There's a lot of merit to some of that. Look, I'll tell you a quick story by background. One of the first banks that Ripple signed, so today we have a product in market that's, we're releasing version 4. When we launched version 1.0, which is always an exciting time for a tech company, you release a product, it's version 1.0. We launched that product, we were partnered with one of the largest banks in the Middle East, and we went to market, and we went live. And we had a call from a very upset Middle Eastern banker saying, wait a minute, people can see my transactions. I don't want people to see my transactions. So look, blockchain is powerful and a public ledger can be leveraged to make transactions, but banks, if every SCB transaction was written to a public ledger, would SCB be excited about that? The answer is no, I'll tell you very certainly. The nature of how we have evolved our technology, yes, some of it, XRP is a public open ledger. A different part of Ripple's technology that connects banks to the liquidity solutions, these are private, think about it almost as a private temporary blockchain between two banks. It's cryptographically signing the transaction, holding it in escrow, and releasing it at the same time, so you never have a situation where a transaction doesn't complete. But the point I would make is, those who espouse this idea of, look, all transactions should be open, I look at that and I think, that is not the real world. We can talk about the origins, particularly around Bitcoin, and to some of the degree other tokens, has been this idea of, hey, we're going to circumvent governments. We don't want the government involved. We're going to circumvent banks. Look, Ripple, we come at it from exactly the opposite point of view. Governments aren't going away. By extension, banks are definitely not going away. We can enable banks to enable an internet of value. If you want to enable an internet of value, you have to connect the repositories of value. The repositories of value are the banks. We want to work with the banks, with financial institutions, with payment providers, with Linlin Pay or PayPal or fill in blank, to dramatically accelerate the nature of how payments occur today and reducing that friction.
Exciting. Now, for me, what's amazing about Ripple, particularly when we as SCB were looking at it a couple of years ago, is not just what Ripple is doing as a blockchain infrastructure company in the payment space, but your vision beyond financial services. So can you tell us a little bit about what the Interledger Protocol is?
Sure.
And what Ripple's vision for it?
So, as Paul has said, I don't think you have to understand all the technology behind all these things and how they work in order to participate in the blockchain ecosystem. One of the core technologies behind what Ripple is building is called the Interledger Protocol. The premise here is the idea that there won't be one ledger to rule them all. So we need to think about interoperability between ledgers. The ledger, enabling interoperability between Linlin Pay and SCB's ledger, enabling the interoperability between SCB's ledger and the Australian Stock Exchange. And the idea is, how do we stitch these together? The idea, that one ledger, there'll be one blockchain to rule them all. You'll almost never hear me say the blockchain. I'll refer to a blockchain, because there's many blockchains today. There's going to be more blockchains. We need to enable them to interoperate in a very seamless way. So, today we sell technologies that leverage the Interledger Protocol to connect different ledgers. That includes the Bitcoin ledger. That includes the Ethereum ledger. That includes Hyperledger. We want to make sure that our technology, in some ways like TCP/IP, TCP/IP is the underlying technology of the Internet of Information. We see the Interledger Protocol, or ILP, as the open source technology that underpins the Internet of Value. We're selling connectors between bank ledgers and financial institutions ledgers and ILP, and enabling them to use that technology to transact in a trusted way in real time.
And what value does that create to the blockchain space versus not having that Interledger Protocol?
Well, I think the big value is the interoperability piece. You can hold a Bitcoin and transact it over to, hypothetically, to the B of A, Bank of America's ledger. I think about, our goal around an Internet of Value really is, how do we reduce friction across all of these different use cases? It's really hard to think about, the science fiction of 20 years from now, if you can reduce value, if you can reduce friction to move value between any transaction, not just for corporate use cases where it's $1,000 or $10,000, but a penny. I mean, think about, back to science fiction, today, the only efficient way for you and I to transact for a nickel, I don't know what the equivalent is in baht, but a nickel is for me to hand it to you. That's kind of a crazy thing. There's no other way to efficiently move a nickel. Do we not think in an Internet of Things, an Internet of connected devices? Some of those devices are going to be economic actors. Some of those devices are going to be able to pass transactions. They're going to be micropayment needs that our existing financial infrastructure cannot support. And this is an example where the Interledger Protocol can enable this for virtually zero cost to enable transactions between ledgers.
And I imagine that opens up a broad new world of the economy. Once we start talking about micropayments, we start talking about financial inclusion, we start talking about including populations that don't get to participate, not just in the financial system, but probably even the information system at large.
Sure.
And we'll probably touch a little bit more on that when David's up here.
Absolutely.
So let me ask, Ripple's had experience engaging with governments and regulators the world over. Can I ask you, what are some of the most common concerns and fears that are almost universal across all these regulators that you've spoken to? And do you have any advice or words of wisdom or just thoughts that you could share with the regulators that might be in this audience about how they might start thinking about or engaging with blockchain in such a way to allay those fears?
I want to answer this in two different ways. The first is, back to my comment earlier, there is a lot of misinformation. There are digital assets that were designed specifically for anonymity. They were designed to circumvent regulators. They were designed to circumvent governments. Not all digital assets are created the same. When I look at how an XRP transaction, back to our conversation earlier about funding liquidity between different currencies, every transaction we enable is through a regulated endpoint. So what happens is I'll go and talk to regulators around the world. In the first 6 or 7 minutes of the meeting, they're leaning in, and you can tell they're ready to pounce. They're going to want to crush this guy. He's the bad, there's crypto, and they're enabling things we don't want to enable. And once you explain to them, no, hold on. There isn't regulatory uncertainty. Like one of the things I get some humor out of is I hear people in the crypto space talk about regulatory uncertainty, and I think, what does that mean? More often than not, what that means is I disagree with the regulatory certainty, so I'm going to call it regulatory uncertainty. When we look at a transaction through XRP, it's going through an endpoint that's doing a KYC check. Back to your comment earlier, I know your customer. It's doing an AML check for money laundering. It's doing BSA. The transaction's happening from one regulated endpoint to another regulated endpoint, regulated sometimes by the Thai central government or the US central government. But these are not transactions where we're trying to solve a use case around anonymous drug dealing or whatever the other use cases may be. And so what I would say to regulators globally is don't assume because you were introduced to digital assets through an article about Silk Road or Alphabay that we should throw the baby out with the bathwater. When I hear people talking about banning cryptocurrencies, I think, whoa, hold on a second. Let's understand, they're not all 1,500 are created equal. And certainly there are examples that I think are inappropriate and governments should intervene, and that includes with ICOs. But there's also examples where we can work with the institutions. We can work, the thing I've been fond of saying is the blockchain revolution is not going to happen from outside the system. It's going to happen from within the system. By working with the system and adopting these technologies, we can accelerate the speed, reduce the cost, and make financial services available to customers who they couldn't access it before, as you mentioned in terms of the underbanked or the unbanked, but also just for use cases we haven't even thought about. If you accelerate the speed and reduce the cost, you're going to see lots of interesting use cases pop up.
So this actually brings us back to the whole issue that we put on pause on ICOs. We're talking about cryptocurrencies, we're talking about ICOs. And it strikes me that it's not a black and white issue. If I were to ask you, is it good, is it bad, my guess is that it's a very strong, it depends.
Well, I might surprise you a little bit on that. I think it mostly is bad.
Okay.
There are exceptions, but to every rule there's an exception. So I think, look, I'm not popular for saying this in the crypto community. Ripple has often taken a contrarian viewpoint in working with the banks and working with governments. I think a lot of the ICOs, and I would say, certainly over half and maybe as many 90+% of these ICOs, I don't understand what the real use case is of the token. And if there's not a real use case, it's really a securities offering. And if it's a securities offering, there's not regulatory uncertainty. It should be regulated as a securities offering. So, look, I recognize that many people may disagree with that, but, some people forget why regulations have evolved in the securities issuance. It's because there was a lot of fraud. There was a lot of people taking advantage and preying upon investors. In some ways, what's happening with ICOs is making angel investing more accessible. Well, angel investing has historically been, hey, someone I know and someone I trust is building a business, and I want to invest in that. But when I hear someone in Bangkok buying an ICO for a company in Miami that is doing who knows what, I think, how do you know that they're not going to take all of that value in their ICO and go surfing for the next 3 years?
Well, I mean, I think there were some really recent numbers that came out of Bitcoin.com or Bitcoin News that said that of 900 ICOs since the beginning of 2017, 46% have failed, meaning that either they failed to raise the money or the companies went under after they raised the money.
Or the company had already gone under and they raised the money anyway.
And they raised the money anyways. And that another 13% are near failure, meaning that they've raised money and then all of a sudden they've closed down their website, shut off communications, and are not responding to investors anymore. So we're talking about a 59% garbage rate. I understand that the great majority of ICOs are garbage. I think there are probably a lot of advocates in the community that feel the same way, that there are a number of bad actors. Do you feel that, does that negative sentiment also apply to the process or concept of ICOs, meaning using, finding a way to digitize, the capital market system?
Well, that's a whole different animal. I mean, can blockchain as a core technology help manage and track the issuance and sale and trading of securities? 100%. And there are interesting companies. I mean, where Ripple is focused on being a payments company, there's other companies using blockchain to solve a securities problem. I think one of the most prominent globally is called Digital Asset Holdings. It has a pilot going on with the Australian Stock Exchange to do exactly that. The fact that it takes often 2+ days to settle a securities transaction, again, back to you got to take my $10,000 and fly it there, like, wow, 2 days to settle a securities transaction, that's crazy. So I think, yes, blockchain can be used to solve securities. For blockchain to be used to issue a new kind of security that somehow is not going to be regulated the way a securities issuance is regulated, that's where I start to be very suspect. The other thing I'll just say very briefly, when I have spoken out about this, some people say, oh, that's a very US-centric point of view. I hear that and I think, does that mean that regulators elsewhere in the world don't care about their consumers? That's just ridiculous. Yes, the US might be more strict and more stringent in various ways, but I am certain that the Thai SEC is very concerned about fraudsters who are trying to take advantage of citizens here in Thailand in an uneducated way, investing in things they don't really understand and isn't really giving them a security. So I think that you're going to see regulators in 2018 continue to be stricter and stricter around ICOs, and I think that's super appropriate. One last sentence on this. I think what's holding back the whole blockchain industry are examples. I think the ICO industry has been bad for blockchain. Wow, like that seems like a crazy statement. If we want to solve real problems for real businesses at scale, what's going on in these other examples, it's a sideshow. The blockchain industry kind of has to grow up and realize regulators matter. We can't just ignore regulation. We need to embrace and engage, and in some cases, educate regulators. I mean, I think your original question was, like, how would I educate regulators? But I'll leave my rant at that.
Okay. No, I mean, and just to throw in one last word on really just trying to almost not legitimize, but really move ICOs more towards a paradigm where they become a means of accessing the capital markets. I was just reading an article just yesterday that the city of Berkeley in California is looking at an ICO as a means to issue municipal bonds. So they're really, not so much because they're trying to create a new type of security, but they're looking for a way to cut through all the process and all the inefficiencies that come with municipal bond issuance.
And look, there are plenty of examples where we have regulation kind of run amok, like too much red tape. But again, we can't forget that there's a reason why those exist, and they exist to protect investors and to protect companies. I think another thing people forget, if you are an entrepreneur thinking about issuing an ICO, save some of the proceeds for your legal bills. Because there are lawyers who are going to prey upon the uncertainty of what is that a security, and they're going to issue class action lawsuits. And if someone loses money on the token you issued, assume that lawyers are going to come, and that's already happened in a couple of examples where the entrepreneurs behind a token issuance are personally being taken to court and sued for damages.
Good. Before
that's not good.
Not good for you guys, but it's
useful to understand.
It's good to get your opinion on that. So as we sort of approach the finish line, I want to save this last question to really step away from Ripple and from fintech and really talk a little bit about your past. For those of us that have followed the Mirza Mayer era of Yahoo, where I know that you were a senior executive in 2006, we're very familiar, those of us who are very familiar with the Peanut Butter Manifesto that you penned in your time at Yahoo. Can you share with us, especially those that aren't familiar with what I just spouted out, what the Peanut Butter Manifesto is, and are there lessons that banks, startups, corporations here can draw from that?
Yeah. So this is a while ago. You're dating me a little bit. It's 2006. I was a senior vice president at Yahoo, and I was frustrated by what was going on at Yahoo. And I felt like we'd kind of lost our way from the glory days of Yahoo early on. And I described our allocation of investment inside the company as spreading peanut butter across many different things. We were partly a search company, and partly an email company, and partly a sports company, and partly a fill in blank. And my point, and I'd say this is true for any company of any size, you have to know what problem you're trying to solve, and you need to be laser focused on that problem. I think Yahoo kind of lost its way with this peanut butter problem of trying to be all things to all people. I think there are important lessons there to be applied in the blockchain space. When I got to Ripple, we were pursuing 3 different verticals. Digital identity, you talked about, cross-border payments, and one other one I'll leave aside. One of the first things I said is, you guys, we are a small startup. We can only do so many things. We're going to focus on one. Now, we had our own smart contract technology back then called Codius. This predates Ethereum. Now, you could look back and say, Brad, well, you really screwed up. You should have focused on that smart contracts thing. Maybe that's true. My point really is, I think having focus, having clarity of what problem you're solving is incredibly important. And I think in the blockchain space, that's as important as any others. I have been not shy about pointing out that the Hyperledger web page, the Hyperledger Wikipedia page, talks about over 140 different use cases of Hyperledger's technology. 140 different use cases. That is peanut butter times, I don't know, I need some other metaphor. But I think you have to say, look, we're going to focus on a few things. For Ripple, that's payments. And I compare that to when Amazon started, they were a books company. I mean, again, I'm dating myself, but in 1997, Amazon was not called Amazon. It was called Amazon Books. They competed as a bookseller. They got very good at selling books, and then they entered another vertical and another vertical, and they grew and grew and grew. I think about what Ripple is doing with blockchain is our first vertical is payments. If we want permission to work on another vertical, we have to nail it for our customers in payments and solve a really big problem. If we do that well, we're going to be in a great spot.
Awesome. Brad, I think we're just about out of time. It looks like we might have time for one question. There seems to be a lot of questions that are bubbling out here. I can't read it. Is there anything here that you might want to try and tackle?
Ripple is not public blockchain. How does Ripple have high security? Ripple is the XRP, well, I guess that's true. Ripple is not public blockchain, correct. Ripple is a software company selling solutions to banks. XRP is a public blockchain. Now, Ripple's technology in the cryptography that we use, we've never had any intrusions. We've had, I think, over 30 million successful ledger closes. So we haven't had any issues. We take security extremely seriously. We happen to be fortunate to have some of literally the planet's leading cryptographers that work at Ripple. A guy named David Schwartz is extremely well known in this regard. So we have high security because we invest in it.
Can we take the next one? Yeah. We have a few minutes. What's the next one up?
Aside from financial and cryptocurrency, what business sector that will first adopt blockchain technology? I'll take a little bit of a flyer on this one. We talk about blockchain in the financial system because the financial system has lots of intermediaries, lots of central counterparties. Well, if you extend your thinking a little bit around this, what are some other central counterparties? Well, one that you don't think much about is Dropbox. Dropbox is a central counterparty managing your storage. AWS might be a more enterprise version of the same. How could you disrupt Dropbox as a central counterparty for storage? There is an ICO, which is, this is the exception to the rule, but there's a company called Filecoin trying to do exactly that. I personally have no idea how it's going or if it'll be successful, but I think there'll definitely be other business sectors touched. I think like the internet, it's hard to predict all the different ways the blockchain is going to be used to change businesses. But anyone who is in a central counterparty or intermediary, I think they should assume that blockchain technologies will touch them in one way or another. It doesn't mean they go away. It just means they're going to be impacted.
Interesting. I hadn't thought of Dropbox as a... I saw them more as a disruptor, but a disruptor being disrupted. That's an interesting concept.
Yeah, hard to predict.
Can we get one last quick question? I think we could probably squeeze in one more before time runs out.
I think this one's for you.
What is the direction of SCB and DV on cryptocurrencies regarding BOT? Just announced regulation not accepted in Thailand. I'm going to say no comment until I can talk to my boss. Okay, and I think we're going to leave it at that. So I'm going to say on behalf of SCB and DV, we are thrilled to have you with us on stage. We are thrilled to be working with Ripple to not only revolutionize the Thai financial services industry, but hopefully all industries that could be touched by blockchain. So
thank you, Paul.
Thank you very much.
Thank you, everyone.
Okay. Thank you very much.
Thank you.
Nice. Thank you very much. Thank you very much, Mr. Paul.